You mentioned Amazon now. I have to ask, in 2018, I think it was, Amazon, reportedly attempt to acquire and successfully do for a very large number. Talk to me about the decision-making process there. That comes in. What's the decision-making like, and how did you get to the deal?
Yeah, so if you zoom back to that moment, I think it was like mid-2017, early 2017 probably. We had just finished overhauling like all the software that powered the pharmacy. So when we started the company, we just bought everything off the shelf, right? And over time, we started ripping components out. And by early 2017, we had rebuilt and ripped out all of the underlying tech and that powered the pharmacy. And we had this moment where we like kind of picked our heads up and we're like, what should we do now that we've done that, right? Almost all our resources have been focused on that for the longest time. And we had this idea of like, could we offer our infrastructure up to other participants, right? So could be another startup that needs to launch a pharmacy experience. Actually, Row launched on our infrastructure. And we were offering like this as like a fulfilled by Amazon kind of B2B business based on the fact that we had the tech, the insurance contracts, the licensing, like the infrastructure. And as part of that, we were meeting with all the large retailers and other potential customers to build on top of that, right? And one of those large retailers went from like a very commercial conversation to an acquisitive conversation like relatively quickly. And by kind of fall of 2017, that had...
How do you know when it's going to an acquisition from a partnership in a normal conversation? Do they say, hey, we want to buy you?
Yeah, usually when they call and say, hey, could we just buy the company? It's pretty clear it moved from like a commercial thing to like an acquisitive thing. I wasn't reading the tea leaves at the same time, but it was pretty explicit at that point. And I think we looked at where we were, and a couple of things had happened. One, like we were now like a version of scale, right? Like a couple $100 million in run rate or something like that. And we had a very good sense of like what our economics were and what it was going to take to build what we really wanted to build. And from that standpoint, like it was going to be pretty capitally intensive to scale this thing to the extent that we wanted to, right? Like it was doable. Like we could have definitely built an independent company, but it was going to be capitally intensive. And then probably more importantly, like when we started PillPack, like it was a very simple vision, which is just make this as easy as possible for consumers. And I think as we started pulling on that string over the years, like we had all these incumbent issues and everything else, we were more ambitious, right? Like we wanted to fix the supply chain. We wanted to fix a bunch of other stuff in the industry. And we had gotten convinced the best way to do that was to make pharmacy a shoppable like e-commerce experience. And a bunch of stuff falls out of that ultimately reshapes the dynamics. And so the combination of those two things, like the best place to do that is at a large retailer that already exists. And so it was pretty straightforward. And we made the decision, assuming that the terms came to a place that made sense, that we would probably sell the company in like the back half of 2017.
Okay, so you decide that you're going to sell the company in the back half of 2017 and it needs a lot of cash to get it to the scale that you think it can be. And then it's like, okay, there's a process to run. How did you think about running that process? You mentioned there the early interest. I'm sure there was many other interested parties. How did you run that process, and what was that decision-making on ultimate acquirer?
Yeah, so we, I think this was somewhat public in the middle of the process, but that same initial kind of retailer that had flagged they wanted to buy the company got to terms that we were comfortable with. And we spent some time with other acquirers, but it was clear that they were the lead horse and it was probably the right fit and the best option. And so this was kind of early 2018, and we had, 6 months of runway in the bank or something. And so normally that's when I would have raised around, right? Like you'd raise 18 months, you'd then probably raise when you've got 6 months of runway left, something like that. And so we had started a fundraising process in January of 18. And then within a few weeks of that going, we got to terms with a potential acquirer, and we assumed we were going to sell the company to that acquirer. And so we shut down the fundraising process. We sort of full steam ahead on getting the deal done. Honestly, we were days, like not weeks from being done, like announcing, like this thing is done, like definitive agreement, like done. And it hits a snag and it's going to get delayed. And so now like the whole board thinks we're selling the company in like 3 days. I think we're selling the company in like 3 days. And now it's not going to be 3 days. It's going to be some unknown amount of time. And now instead of having like 6 months of money in the bank, I've got 2 months maybe, because like we're selling the company in 3 days. Like I had 2 months of money is great. You perfectly timed it. And so I had to tell the board, obviously. So I got a phone call on a Thursday night. I tell the board on a Friday morning. And we've now got to go. I sort of pick back up the fundraise. So like I'm flying to San Francisco Monday morning. I'm going to New York on Wednesday. And then maybe I'll go to see if I can get a meeting in Seattle with some other potential acquirer by the end of the week. And that's what I did. So I got on a plane and I went back and met with all the potential funders, not acquirers, and told them what happened. I thankfully, like, we'd shared all our numbers in like December, January, and we'd beat all those numbers in now like April or whatever this was. And so like, that's better than if we had missed them for sure. And it was kind of like, we're up for anything. Like, we'll figure something out here, like, but we don't have a ton of time. So let's just like be creative. Then I had the meeting with the company in Seattle, and it was definitely the best pitch in my life. And we were just mano a mano. And I think at that point, I knew we were selling the company to Amazon. Like, all of our vision around what to do with pharmacy and how to make it shoppable and all those things, we were just super aligned. And at that point, I knew we were going to sell the company to Amazon, and ultimately we did. And it was a great outcome.
How do you come to, sorry, I'm so naive. How do you come to a price? Do you sit across the table and be like, I want $1 billion? And they're like, okay, great. Good for you. What does that look like in terms of that negotiation process?
Dance. By the end, I sat on the phone and said, I want $1 billion. That's definitely what happened. But, getting to the first deal was it was a dance, and it was about where we think the company's valued, where the investors' positions, like what's an economic outcome that's good for everybody. And if we can't get there, we're just not going to do a deal. It's not like we had to sell the company. We could have raised another round and kept going. And so that was more of a dance. By the time it got to doing the deal with Amazon, like ultimately it was a phone call that was like, if you hit $1 billion, we're done. And they hit $1 billion and we were done. But that's the byproduct of lots.
I'm naive again. When you have a deal like that, and you can tell me if I'm asking too many questions, is it like $1 billion and you get the cash? Is it like $1 billion in earnouts? How did deals get structured?
They're all different. Even so we had 3 potential buyers. Each structure was different, whether they bought the whole thing or most of the thing, or whether it was all up front or there was some earnout. And there were varying degrees of those things. But I would say, by and large, every deal is going to have some of the money up front and some in earnout. And so I think we announced in June, no money then, because you haven't closed yet. There's this whole regulatory process and everything that takes some time. So I would say for entrepreneurs, that moment from announcement to close is a relatively stressful period of time. But I think we announced in June, we closed.
It's also weird though, because your friends think you're loaded and you're like, no, I don't actually have any money.
Yeah, well, you're definitely not loaded yet. There's plenty of deals that blow up in closing, not typically for diligence, but more for government oversight reasons. But then we closed in September. Then yes, a lot of money hits your bank account. In order of magnitude, more money than that.
Does it hit your bank account in one go? And can you just take me to the moment when you saw your bank account? Were you on in the garden with the kids? Where were you when you saw it hit?
For me, the moment that was more endearing was it telling the team, which is the same exact time, right? No, that isn't the same time. That's later. Okay. So we told the team. That was better. My dad was there. My mom was there. All of the companies that traded in pharmacy in the public markets dropped by 15% in 3 minutes. So it was that moment was honestly for me was better than when the money hit my account. It was just such a moment. When the money hit my account, it was just a lot of refreshing, like it is anytime lots of money hits your account. And then it was.
Where were you? Were you at home? Were you in the office? Were you with your wife?
I don't remember, crazily. I certainly remember where I was when we announced the deal, but I don't know where I was when the money hit the account.
I've heard quite a few people say, bizarre, you're a weird bloke, TJ. I'd be like, I was here. I remember my heart rate, my temperature.
At that point, it was such a given. It was going to happen. I don't remember.
Can I ask, I've heard people say, it's kind of a shame. TJ's a once-in-a-generation founder. The company could have been 20, 30 billion reinventing healthcare on its own. Do you have any regrets about selling?
No, I really don't. I mean, that might be true. It's not I'm not saying that that's not possible, but we set out to start PillPack. We just wanted to make pharmacy better. That was the ambition. And when we sold the company to Amazon, I deeply wanted to build a shoppable pharmacy experience. And we did that. We built and launched Amazon Pharmacy, and that's humming along, and I'm super proud of that work. We also were able to build and launch Amazon Clinic, which is a 3P marketplace for telemedicine providers. And there's lots of other stuff that I think will be a byproduct of our thinking and what we've built at Amazon. To say nothing of the fact that the thing we built and the work we did at Amazon, it's the only big tech company that's actually providing healthcare and doing real things in healthcare. And so that's a legacy that I'm super proud of and really happy about. And economically, like I don't ever look back and wish I had kept going, and it could have been so much bigger and so much better. Just super happy with the outcome.